Are you still on the fence about buying a house? Today I want to talk about a big question a lot of Kiwis are asking, and it is this finally a good time to buy a home in New Zealand? Hi, I'm Nicola Winters, a mortgage and KiwiSaver advisor based here in New Zealand. I help Kiwis make smart financial decisions, especially when it comes to buying a home. Now, the reason this question is coming up a lot right now is because the Reserve Bank has just cut the OCR. That's the official cash rate here in New Zealand. They've cut it by 1/4%, bringing it down to 3%. And this is the lowest it's been in 3 years. So what does that actually mean, and how does it affect you if you're looking to buy your first home here in New Zealand? Let's break it down. Firstly, let's cover what the OCR actually even is. The OCR is basically the Reserve Bank's tool to help them control the economy. When they drop the OCR, it makes it cheaper for the banks to borrow money. In turn, banks often lower their interest rates for things like mortgages. It also usually means that savings interest rates drop too. So in simple terms, basically if the OCR is down, it equals cheaper borrowing, but also less interest on savings. Now, why did the Reserve Bank make this cut? Basically, it's because the economy has slowed right down here in New Zealand. Consumer spending is weak, businesses are holding back on investments, and globally, things are looking a bit shaky. By cutting the OCR, they're trying to stimulate the economy, get people to spend more money instead of holding on to their cash. They've also signaled in the future that more cuts could be coming. Some economists are also predicting that the OCR could go down to around 2.5% by the end of this year. So what does this mean for you as a potential home buyer? The good news is, if you're borrowing, you're going to get lower interest rates, and this means lower repayments towards your mortgage. It also means that you'll be able to potentially borrow a little bit more money than you could have before. Lower interest rates and repayments mean that it can make buying more affordable for you on paper. It can also help you to pay down your debt faster if you structure it well. And that's where a good mortgage advisor can support you and help you with making informed decisions. But there is another side to this situation. Lower interest rate tends to increase demand, and it gets more people thinking, hey, now's a good time for me to buy. Basically, if demand goes up, this also can mean that house prices can rise. So while your repayments may get cheaper and borrowing may be more available to you, it does mean that you may see a little bit more competition in the market for properties. So here's my advice if you're a first home buyer. Number 1, get a pre-approval. If the right property comes along, you want to be in a position where you can act quickly and move fast. Number 2, don't overstretch yourself. Yes, while the repayments may look nice right now while interest rates are lower, just keep in mind that interest rates can go up, and this can mean an increase to your repayments in the future. So don't bite off more than you can chew. If you're pre-approved for a certain amount, just keep that in mind, but maybe peel it back to a more reasonable level. Always build a buffer in for yourself. Number 3, think very carefully about how you're going to structure your mortgage, thinking fixed rates versus floating rates. Floating rates may drop further if the OCR keeps falling. However, fixed rates do give you that level of stability, knowing what your repayments are going to be. Your structure really does come down to your personal situation, so make sure you're working with your mortgage advisor and get unique advice for your situation about how to structure your mortgage. This is a great opportunity to make the most of the lower interest rates and chip away at your debt really quickly. And finally, my last tip is to make sure you're maximizing your deposit. Make sure you use your KiwiSaver if you're eligible, and put any cash that you can towards your deposit. The less you borrow means the less you'll need to pay in repayments towards your mortgage. So only borrow what you actually need. From what I'm seeing in the market right now, inquiries with clients are definitely picking up. People are starting to feel a little bit more confident and are wanting to make a move before 2025 is over. So to wrap this up, yes, the OCR is down and tracking downwards, and it could potentially be a good time to buy if you're in the position to do so. It's a little bit easier to borrow money right now, so this is a good opportunity for first home buyers to make their move and enter the market. Don't get caught up chasing the lowest interest rate though. Make sure you're financially ready and in a position to buy. If you are thinking about buying, get in touch with a mortgage advisor such as myself, and we can have a look at your numbers and see where you are and make sure that you're making the right choices for your individual situation. It's important to get advice, get organized, and prepare for what's ahead. I hope you found this video helpful. Thank you so much for watching. Make sure you like and subscribe, and I'll see you in the next one.